Coming up on Business Incorporated, Fitch and Moody's project strong growth for Ghana in 2021. Kenya Revenue Authority issues accounting guidelines for corporate tax rates. And President Ramaphosa of South Africa launches tourism equity fund to transform sector. Hello and welcome to the program. I'm Chimeze Obi Iwagu. We'll begin the show with the intraday market numbers. And here on the African continent, major markets we track here were mostly positive except the JSE index in South Africa, which declined 0.52%. On the flip side, Nigeria's main index sustained positive sentiment seen since the beginning of the week and was up 0.33%, while the EGX 30 in Egypt rose 0.55%. Kenya ended Tuesday's session positive. And major markets in the Gulf region were also in the green at intraday. In the UAE, Abu Dhabi's main index advanced the most by 1.42%, while Dubai's index was higher by 1.05%. Elsewhere in the region, Saudi Arabia's index rose 0.25%, while the Qatari index added 0.08%. In Europe, stocks were mixed in the morning, echoing an uncertain trend seen in other global markets overnight. Well, let's talk to Ashutosh for more from the European scene. Hello, Ashutosh. Well, the IMF has cut its forecast for the Eurozone in its latest World Economic Outlook. What prompted the IMF's call?
Well, it just reflects the possibility that the European Eurozone is headed for a double-dip recession. We must remember that there are still sweeping restrictions in place. The pandemic is still not in control, and that's the reason why there has been a downgrade as far as the outlook is concerned. Even on the vaccination front, the European Union as such is actually struggling. The entire vaccination drive is faltering, and it's come under a lot of flack, and all this perhaps is giving rise to speculations that perhaps the European Union would take more time to come back on the recovery path. It did really well in the third quarter. That was a great recovery, but then from fourth quarter onwards, it's been the same old story. And even if you just consider a broader picture, that looking at how the Eurozone came out of the 2008-2009 crisis or the previous crisis, it just shows that the Eurozone just struggles to come out of these crises.
Now, on the vaccine issue, French pharmaceutical company Sanofi has said it will help produce more than 100 million doses of the COVID-19 vaccine developed by its competitors Pfizer and BioNTech by the end of the year. That should help Europe's sluggish vaccination drive, right?
Yeah, that should definitely be a great help, and at the moment any help is welcome, especially because Pfizer and BioNTech are actually struggling to even keep up their commitments or contractual obligations. They've cut supplies to the block, and that's the reason why any help is a big boost to their efforts to actually boost their output, to increase their output. And here it is Sanofi, which is actually quite an experienced company as far as vaccines are concerned, and if you keep in mind that the plant that they are using to help Pfizer in this partnership is the plant in Frankfurt here, and that's not very far from Mainz, where BioNTech is actually producing the vaccine. So they are going, logistically it does make sense, and also the fact that the technical expertise that Sanofi possesses, where it knows how to deal with ultra-low vaccines, and that's the kind of vaccine even that BioNTech and Pfizer are producing. So it's a major positive as far as the vaccination drive is concerned of the European Union.
Another development, Italian Prime Minister Conte resigned yesterday as expected. How are markets reacting to this?
The The markets have taken the news in their stride, and it hasn't really had much of an impact on the markets. In fact, yesterday the Italian index finished in green, and even the bond markets were hardly perturbed by what happened. That's because they believe that it's not going to lead to a snap poll, because a snap poll at this point is going to be really damaging for the main governing parties, and they wouldn't like to go for a snap poll at this time, because people are really they're really upset as to why this sort of political uncertainty at a time when Italy is not only Italy but the entire Eurozone is going through an economic crisis. So that's the reason why the markets don't make much of it, and also the fact that they see the broader plan of Conte that perhaps he comes back with a new coalition in place.
Anyway, the issue of coronavirus remains there at the forefront, so we continue to track those developments there, and with the vaccine. Enjoy the rest of the day. And in the UK-EU vaccine wars, AstraZeneca Chief Executive Pascal Soriot has explained in detail why the amount of vaccine produced by different sites may vary hugely, and that the UK ordered the COVID-19 vaccine, that's about 100 million doses, from the drug maker 3 months before the EU. This and more are making headlines this afternoon. Let's talk to Juliana. Hello, Juliana. Good afternoon. Well, at the ongoing World Economic Forum, EU officials were said to have asked AstraZeneca to redirect doses made in the UK to make up for problems at the Belgian plant. But AstraZeneca CEO has explained why vaccine production varies between sites. What's the crux of the matter here?
Good afternoon, Chimeze. Well, this is a developing story, a little bit confusing as well, because there are so many conflicting reports about whether or not there was a meeting between EU officials and AstraZeneca. AstraZeneca have denied it. There are some that saying there was a meeting and people stormed out. But this story has global significant importance because there isn't enough vaccinations for everyone, especially for the anti-vaxxers out there who are worried about the vaccine. This does go to show that there isn't enough for everyone, and the storm is brewing. And so this goes back to last year. Britain were one of the first countries to pre-order this AstraZeneca Oxford University vaccination. Very important to emphasise the Oxford University side of this vaccination compilation, because many of these vaccines are made here in the UK. They did that in June, and it was 100 million orders. The EU, lots of red tape, lots of bureaucracy. They didn't do that until 3 months later. And then, of course, Britain was the first country in the world to do the jab. Now, last Friday, AstraZeneca have said that unfortunately they are not going to be able to keep up to the order from the EU. In fact, there will be a massive shortfall of 60%. This comes at a time when the EU are significantly lagging behind the rest of the world when it comes to vaccinations. Britain are doing 500,000 jabs a day, 2.5 million a week. They have vaccinated 10% of their population, the adult population. The EU have only done 2%. Parts of this AstraZeneca vaccine are produced in Belgium, and there were mass concerns that the EU would try to block some of these vaccinations coming into Britain. This has been addressed by Prime Minister Boris Johnson. He addressed it yesterday, saying he's sure the EU wouldn't do this. But the EU, as you can imagine, are absolutely furious that AstraZeneca have said, they may not be able to keep up with this order. And, the war continues. But I think that the most important aspect of this story, which I think has been really emphasised by the international media, is that there are just not enough vaccines for everybody. So people have to be very, very careful about sharing fake news about the dangers of the vaccination. Yes.
Yeah, and that's the major problem there. Anyway, former Prime Minister Gordon Brown has called for emergency measures to support businesses in the budget after new research from the London School of Economics warned almost 1 million UK companies were at risk of failure in the next 3 months. How seriously are the authorities taking Brown's call?
Well, you know, Gordon Brown, former Prime Minister, former Chancellor of the Exchequer, probably one of the most successful chancellors this country has ever had. He led Britain through the global financial crisis in 2008. He has actually been in the media a lot this week. And, you know, he's very qualified, but he's not the only one stressing the importance of the Chancellor, the current Chancellor, Rishi Sunak, doing much more to help businesses. The LSE findings are very similar to the findings we discussed on your show a couple of weeks ago, actually, from the Federation of Small Business, looking predominantly at macro businesses. So these are businesses with 10 or less employers, and they are really struggling. And I believe a survey was done, and 1 in 7 of these businesses, which employ about 2.5 million people, have said they just won't be able to survive in the next 3 months if there isn't enough support. There was a second report that was also released on the same day. This was by Begbie's Trainer, and they found that 620,000 small to medium-sized companies are at risk. This was a separate report. We do know that SMEs are the engine of any decent economy, and this is worrying. Now, of course, the government are going to say, and they have done a pretty decent job in trying to help businesses. They spent over £250 billion. There's the furlough scheme, VAT holidays, corporate loans, small loans. There's the bounce back loan. But what the LSE and I believe Gordon Brown are asking is that this continues. We know the furlough scheme is going to end in April. A lot of these VAT holidays are going to end very, very soon. And they're expecting the government to now expand some of these programmes and at least to extend them to the summer, as we're still obviously in the grip of this deadly pandemic.
All right, let's check with the market. Bring us up to speed with the intraday numbers.
Well, the FTSE started in the red at early trading, and at intraday it's firmly in the red, Chimazé. The FTSE all-share is down 0.14%. The FTSE 100 is down 0.33%. And the FTSE 250, the domestic market, is up slightly by 0.06%. In currencies, the British pound down on the US dollar by 0.01%, up on the euro by 0.27%, and up on the Japanese yen by 0.14%, Chime.
All right, the market is still trading, and I'm sure you'll still have your eyes there. Enjoy the rest of the day, Juliana. We'll talk tomorrow. And stocks in Asia Pacific were mixed today as the International Monetary Fund raised its growth forecast for the global economy this year. The Nikkei 225 in Japan rose 0.31%, while the Topix index gained 0.65% to finish its trading day at 1,860 points. South Korea's Kospi closed 0.57%. Mainland Chinese stocks nudged higher on the day. The Shanghai Composite advanced 0.11%, while the Shenzhen Component gained 0.4%. Hong Kong's Hang Seng Index was above the flat line as of its final hour of trading, with shares of Chinese tech giant Alibaba rising 2.76%. In Australia, the S&P ASX 200 declined 0.65% to close at 6,780 points. And futures contracts tied to the major U.S. equity indices were mixed today as Wall Street pored over earnings results from Microsoft and awaited similar updates from Apple, Facebook, and Tesla due out after the closing bell. Nasdaq 100 futures implied an opening gain of about 61 points. Dow futures and S&P futures, on the other hand, traded in negative territory. A handful of stocks, including software giant Microsoft, dominated the trading action in the extended session. Microsoft investors appeared pleased with the company's performance in its fiscal second quarter when it grew revenues 17% on a year-on-year basis. And global oil market prices climbed earlier today after industry data showed U.S. crude stockpiles fell unexpectedly last week, and China, the world's second biggest oil user, reported its lowest daily rise in COVID-19 cases, bolstering hopes of a pickup in demand. Brent crude futures climbed 0.3% to $56.10, while U.S. West Texas Intermediate crude futures rose 0.4%. The American Petroleum Institute reported crude oil inventories in the United States fell by 5.3 million barrels in the week to January the 22nd compared with analyst expectation for a build-up of 430,000 barrels. However, the data showed gasoline stocks rose by 3.1 million barrels, which was much more than expected. When we come back, we'll look at stories across the African continent. Just stay with us. South Africa's President Cyril Ramaphosa has confirmed the country will soon receive its first consignment of COVID-19 vaccines from the Serum Institute in India, the world's largest vaccine producer. While it is still unclear whether current vaccines are able to vaccinate against new variants of the virus, Moderna has commenced work on a vaccine to the strain out of South Africa in order to prepare for the worst-case scenario. Okay, Makwe Maselena, the Chief Investment Officer at Makwe Fund Managers in South Africa, joins us now to weigh into this. Thank you very much, Mr. Maselela. Thank you for joining us, and good afternoon to you.
Afternoon to you and to the viewers.
So on Monday, President Ramaphosa confirmed that the country will be getting its first consignment of COVID-19 vaccines from India, adding that it will reach all parts of the country. But how much is the country expecting, and who will be getting it first?
You know, this first batch, we're expecting only 1.5 million, and that's mainly for the health workers, what we call the frontliners, and then the rest should follow thereafter. But yes, the one that should be coming now by end of January, and end of January, I think, is 3 days from now. We have not even yet seen the consignment here, but we know that it was approved, and then the AstraZeneca one was approved by authorities, but it's only the 1.5 that people are also laughing at us, that we've paid almost double the price, but it's only 1.5 million, and that will be mainly for the health workers.
Permit me to ask you, Mr. Masina, would you be getting the vaccine?
I didn't get the question.
Will you be getting the vaccine if you have the opportunity?
Yeah, I think I will, because so far it shows that 95% success rate. Yes, there are different stories. And I think we need to understand that with almost all the vaccines, there is some form of reaction. But the only thing that is worrisome here is that I think the guys have been given the disclaimer that should anything go wrong, you could not sue them. But I think so far people have received the vaccine, and I don't think they can gamble with our lives like that they will continue and vaccinate millions and millions of people around the world with something that they know, number one, is dangerous, number two, something that definitely is not working. Then yes, you will have serious civil unrest. You know, people will be up in arms if it happens to be like that. So yes, chances are 98% what they're offering us, it should be something that should be working.
Absolutely. Well, so still on the vaccine, Treasury is considering raising taxes as one of the several possible mechanisms to fund the biggest vaccination drive in South Africa's history. So what will they be taxing, and how are South Africans like you reacting to that?
You know, number one, we're not too happy with all that, and we hope that it doesn't happen, because they said it's one of the ways that they're looking at. Remember, South Africans tax base now, or the people that you can tax are very few now, given that we've got a very high unemployment rate, over 30%. Just in the second quarter of last year, we lost over 2 million jobs, and we are continuing to bleed jobs. We know that even the liquor industry, alcohol industry is continuing to shed jobs because they're not working, the restaurants as well. So it means people who are paying tax are very few. And remember, in South Africa, the highest tax comes from people who are working, which is your pay as you earn, followed by VAT. And when it comes to VAT, our VAT was just increased from 14 to 15 less than 2 years back. I don't think they can touch that as well. And as we are talking now, South Africans, the highest tax rate here is 45%. So where will you take it to 50%, which is half? I don't think it's a wise idea. And when it comes to companies, for the fact that the economy is not growing, and the economy might not be growing for the next 12 months or so, companies, guys, only pay tax when they've made profits. So who are you going to take there? So I don't think that part will work. Maybe it might be a question of, remember, we got the money from your World Bank, your IMF, maybe to go back to the IMF and still negotiate on the very good terms that they gave us the money this time around, that this money is specifically aimed for COVID-19. So the terms and conditions and an interest rates thereof will be less. So maybe they just have to go back there and try to get more debt. That's unfortunate. Not a wise thing to do, but what else can you do? Or issue maybe a special bond that maybe private investors, including the pension funds, they can see that as part of their social responsible investing, meaning that particular bond, you don't have to expect good returns, meaning the yield that you have to pay from there. It doesn't have to be the 9% that you are getting from the current 10-year bonds, maybe something just above inflation, then yes, people maybe can look into doing that. But taxing people is not right. And I don't know, the program that we had back home here when it comes to HIV, where they got private companies involved, especially our mining companies. It was very successful. So probably the government might want to involve the private sector that, hey, people, can you go out there and buy the vaccine for your own employees? Definitely most employers will do that. And also with our medical aid schemes, paying for the vaccine. So that will lessen the burden if you get private companies involved to pay for their own employees, and also if you allow medical aids to pay for that, then yes, at least it will lessen the burden. The money that you have to raise to buy the vaccine probably won't be that much.
In other words, the citizens shouldn't bear the brunt of paying for the vaccines. Thank you very much, Mr. Marcelina, for your time. It's always a pleasure having you on the show. Please do come again.
Pleasure.
In the meantime, South Africa, in a bid to support one of the sectors worst hit by COVID-19, President Cyril Ramaphosa has launched a tourism equity fund. The president was speaking at a virtual launch of the over 1.2 billion rand tourism equity fund aimed at driving transformation in the sector. President Ramaphosa explains the funding will be in the form of grant funding or loans, would allow black sector businesses to acquire equity for new developments and expanding existing ones.
If the tourism industry is to play its role in aiding the economic recovery in the wake of COVID-19, it must grow and transform. So this effort that we are all about today is going to contribute to this sector growing, but at the same time it must transform. The industry has responded to COVID-19 with a tourism recovery plan. And it entails three strategic themes. Firstly, it's about reigniting demand. Secondly, it's rejuvenating supply. And thirdly, strengthening enabling capability.
President Cyril Ramaphosa, the president of South Africa. Our rating agencies Fitch and Moody's have projected a strong economic growth for Ghana in 2021. While Fitch is projecting a gross domestic product growth of 4.8%, Moody's is projecting a growth of 4% for the economy. On the flip side, the World Bank is being modest with its projection, forecasting GDP growth of 1.4%, which is lower than the bank's 2.7% growth projection for sub-Saharan Africa, while the recovery in private consumption and investment is forecast to be slower than previously envisioned. Export growth is expected to accelerate gradually in line with the rebound in activity among major trading partners. And the Kenya Revenue Authority has released guidelines outlining the applicable corporation tax rates for the years of income in 2020 and 2021. The guidelines will be used by corporations whose accounting periods ended in the year of income 2020 or are due to end in the year of income 2021. In a notice published by KRA Commissioner for Domestic Taxes, resident corporates with accounting periods ending on or before March 30, 2020 have been advised to apply the 30% rate. However, such corporates will enjoy a reduced COVID relief rate of 25% for the income generated in the period April 1, 2020 and December 31, 2020. The lower rate of 25% was introduced in April 2020 as tax relief to counter the negative effects of COVID-19 on business and employment income. And that's a wrap on the program. Thank you for watching. I'm Chimize Ubi Iwagu.